Welcome back to the Wealth Blueprint, Brick by Brick, featuring the Sapphire Group and your hosts, Jessica and Marissa. Marissa, what do we have in store today?
So first, I think we should get into all the real estate company insolvencies that's been going on. So they just released a report that shows that the number of insolvent real estate companies and projects have been rapidly growing, and it's actually on track to surpass levels of the global financial crisis, according to data from the Federal Office of the Superintendent of Bankruptcy. So basically they looked at, so when we say real estate company insolvencies, we're talking about like builders mostly, and most builders, when they build a project, they open separate corporations for each project. So if something happens to one, it doesn't affect the whole company kind of thing, right? Like they could just like clear off one project and the other projects are still greenlit. So from January to May, there was an average of 20 real estate rental or leasing insolvencies in Canada every single month, which basically means we're on track for 240 for the year, which would actually be a 57% higher than last year. And get this, 13% higher than 2009, which was a massive time for a lot of companies going insolvent because of the whole financial crisis of 2008. So basically builders are underwater, and a large part is because it's just not affordable for buyers. So they're trying to get these projects out and nobody's buying them.
Yeah, so I was listening to a podcast and they were talking about how building costs have gone up 81% in the past 7 years.
Yeah.
And so if you can imagine that, have you heard of the One Project?
Yeah,
it was supposed to be the tallest.
Condo
Yeah, it was supposed to be the tallest.
Yeah.
They're in receivership for I think over $1.9 billion.
Oh,
Can you imagine owing someone that much money? It's ridiculous.
Yeah.
And so that was set to be like, I mean, it's like such a prestigious builder. He's like renowned for, making remarkable designs all over. People wanted to buy those.
Yeah.
Actually, I think it was 1.6, not 1.9, but that's in receivership, and it just shows we're struggling so much as an economy. And when they calculate bankruptcies in Canada, they don't include the builder insolvency. Yeah, they don't include that in the rate. So we're actually much higher. So we're saying 57%, and it used to be like 1/3. So we're not actually taking into account what that actually is going to look like. So what does that cost us to become now getting builders back? And like with these whole housing projects, we're getting more builders, and we're going to kind of get into the business of getting more people to build homes because we're not on track. Mm-hmm. We're actually going in the opposite direction.
Yeah, so you mentioned that the cost to build has gotten so much higher, and probably the largest chunk of that is because of government, to be honest. The government, all the charges that they put onto builders, about 25% of the cost to build a home is government fees, mostly development charges, which makes the biggest chunk, and it keeps going up. And so there was many developers came together, formed a coalition, and basically asked the government to bring down the cost of the development charges. And they said, for every dollar that you reduce development charges, we'll pass on that savings to the buyer, dollar for dollar. So it's not really safe. You're not actually charging us less, you're charging the buyer less. And that way buyers will be more likely to purchase it. And so I think this would be a great idea for the government to do, because they're saying that they want to make homes more affordable. And the builder's telling them, do this and homes will be more affordable, right?
I'm curious, though. I always think there's a catch. That's just how my brain works. But if builders are pitching this through a petition, which I think is almost going to get its 500 signatures for sure, they've probably already tried to pitch this to government. Right?
Yeah.
Realistically, you're meeting with them. They've created this housing plan. They should have done consultations. They should have reached out to builders to get their feedback. So this is their kind of like last outcry of like, okay, the government probably didn't listen to us, so let's pitch to the public so they see what we're trying to do, right? So there's always a catch.
So that's exactly what I was going to say. I'm sure this has been brought up before, but now that it's in the public eye and it's like being shown on like news articles and all that, now the public knows about it, and so the government's in the hot seat because they're saying they want to make homes more affordable. The builders are telling them, if you do this, homes will be more affordable. So now if they don't do it, then they're the bad guys, right?
100%. And usually, I mean, I've got a pre-con. You've bought pre-cons before. Mm-hmm. We think of the builder as like, they give us this ironclad APS that's like looked approved by their lawyers. And if you're smart, you'll get your own lawyer to look over it. Mm-hmm. But we just have to sign it because like when I was buying my house, they were like flying off the market. So if we got one, you secured it right away. And it doesn't matter what your builder just tells you or whatever. You wanted a home, you wanted it for that price, and you're securing it. So if these savings are coming to now buyers, what I'm thinking is it in the form of like, we'll give you $20,000 in design credits, which basically like is nothing when you're actually going through what builder things cost? Or is it, okay, you're going to get this rebate, at the end of the year when you've bought your home, or you're going to get it off the price, because they don't also want to water down the market in terms of pricing. And if they are saving, like, let's say $50K per house on a build, sure, that would be great. I mean, I would say $50K on buying a property if it match with market value. But I'm curious as to what that looks like, because you could pitch it and you can make it look nice, like we'll match it dollar for dollar. But what does that dollar mean when, like, adding in 10-foot ceiling costs like $35,000?
Right. So I think if it's for a brand new project, I think it can actually be off the purchase price and wouldn't have to be like a cashback. I think it's more so the whole cashback comes into play when it's like, let's say like phase 3 or something like that. Or if it's the same phase, they don't want to upset the other buyers that have already purchased the project, because if they bought that home for, let's say, $1 million and now it's being sold for like $950, it hurts the other buyers and it messes up the builder's reputation. But also when it comes time to get a mortgage, the bank is going to be appraising that original $1 million property for now $950. So that buyer's in trouble, right?
That happened in 2016. So mad at me. There was a whole bunch of buyers. They were pissed. Phase 1 was way more expensive. And then when it came to phase 7, it was like 100, 200K less. So where were these people going to come up with that extra money, right? They couldn't close. And it was the builder's fault they couldn't close. So sometimes what happened, I think recently when interest rates were going up, builders were actually lowering their prices, trying to make it easier, because you can't have all these people like faulting on their properties, because then where are they going to find new buyers? And then new buyers are difficult to find in this market because interest rates are high. So there were some builders that eased like that. But yeah, you're right. It's tricky. Let's see how the government responds, because I haven't seen any response and I've been looking. Have you?
No, I haven't. You know what I'd love to see for consumers? You know how like when you purchase a condo, there's a status certificate for the condo. You have your lawyer review it to make sure that they have, they're in good financial position. So that way you're not going to be underwater or your maintenance fees won't go up by a ton next year. I wish that they had that same style for pre-construction. You would get, some kind of status certificate about the builder and you could see what their financials are. So, can they actually get this project to completion?
Yeah, and it's hard, right? Because when you're in a position where someone says, you don't know how long they've been a builder for. And like strong-armed builders that have been around for years, they have great reputations or whatever, they have the legal department, they have like so many different departments where they can come back and be like, too bad, sucks, right?
Yeah.
Or how many people do we know that buy properties with carry-on warranty and don't even know what the warranty includes or what year to apply or how to respond to it? So I agree. It would be interesting. I guess it would be called like a builder certification or something
like that.
I think builders would be like buzz off with all the stuff they're dealing with now, but it could be some sort of protection that's put into place.
Yeah, I don't know if so many builders would get upset about it. I just think that there was so many new builders that came into the game in like 2020 because interest rates were so low. Prices were soaring that a lot of people saw this opportunity and they jumped on it. And now we're seeing those same companies going bankrupt, right? So I think like the big builders, Mattamy, Tridel, all the big builders will continue to be there because they're financially strong and they can weather this storm. And so I don't know if they would push back on it, but it's the smaller builders that might not want to, because then their whole game is like publicized. Like they know that now the consumers will know how much money do they actually have. If something were to go wrong, can they actually get this to completion? Because a lot of people bought these properties and now their building is going belly up. And all their deposits are going to be stuck there for who knows how long, right?
Yeah. Speaking of builders and you talking about, everyone's becoming a builder during COVID, building permits in Canada. So StatsCan released the report. They actually declined by 13.9%. And if you want to dollar value that's $9.9 billion.
Wow.
So what does that mean? Less people are building, and it's declined from May yet again. So out of those decreases, it's 11 out of the 13 provinces and territories in Canada, and it's both residential and non-residential sectors that are experiencing these reductions. So what does that mean when we're talking about by the government saying, we're building more homes, we're making things more affordable, we're cutting the red tape, but like no one's applying for these permits. So what's going to happen? We're not actually going to meet those goals that we're meant to meet, and our housing crisis is going to get worse.
For sure, yeah, because right now we do have an oversupply on the market because nobody's touching them, given the state of the economy. But by not building right now, it's setting a huge problem up for the future. In like 3 to 5 years from now, we're going to be in a worse housing crisis than we were a couple years ago, where there was nothing on the market, not enough homes for people to live in, because population is still increasing. So we need to have supply match it, and it's already been a mismatch, and now it's just going to be a much bigger problem.
And like I think it's important to say, like, people can't afford to live anymore, whether it's rent, and that's what you're talking about. But what does that mean? It means people accessing shelters is going to increase. And I'm telling you, by the work that I do, it's already at its capacity. There are wait lists for like years that some people are put on, or months. And what does that mean? Homelessness then increases.
Yeah.
And so our on-house, we're seeing it everywhere. Like when we did our park cleanup, we saw a tent out in the park.
Yeah.
I've never in my life, like I've only thought of homelessness as like downtown cores, like maybe downtown Brampton, city of Toronto, obviously, you see it everywhere. I've never in a suburb seen a tent.
Yeah.
And I mean, that's a privilege, I would say, but if it's getting this bad, where is it going to continue to?
Yeah, it's going to become worse.
And so one thing that I did want to point out is not everything is going down. Not everything is burning to the ground. So permits actually did go up for single family dwellings.
Okay.
They went down by 19.8% for multifamily dwellings.
That makes
and
sense.
Industrial, commercial went down as well. Institutional went up, but that's a given. So what does that mean, right? Like, who's buying these single family homes that can afford them? Think about what the price is going to be at. We need properties that have multiple family usages. So like quads. I would even move away from duplexes and be like, if someone has a home, they should try to find, and I'm against this because of, where I live and somebody turning their garage into a home. But we need more of that. We need people to rent out their basements because that's what people can afford. Look at how much traction we get on lease listings.
Yeah.
For like the cheaper ones. It's because people can't afford it.
Yeah, that's like one of the quickest way to increase density is incentivize people to build basement apartments. They were talking about it for budget 2024, and actually I have a family member looking to do exactly that, and I was trying to get those programs so that she can use it, but it hasn't been actually like rolled out yet. They need to get on that. It's very quick, and then a lot of people will be incentivized to do that, and they want to do it because right now they're feeling the pain too with their high mortgage, having that extra income for them, and they don't have to come up with the whole 50 to 100K to get that done. It would be a game changer.
100%.
All right, let's get into the news about the interest rates. So as we know, there's been 2 consecutive drops of interest rates. So the Bank of Canada's overnight rate is currently 4.5%, which is what feeds into variable rate mortgages, but also lines of credit,
car loans,
lots of stuff. And they're saying the major banks are predicting that it's going to be dropping to 2.5% by next year. So that could be huge, but it also could be a little bit worrisome because that means the fact that we're going to be decreasing so quickly means that the government is scared that we might be headed into a recession.
We need deflation to get back with all the insolvencies happening. But to be honest, with these rate cuts, I feel like more people are just going to continue to wait to buy. And then they're going to be in a position like we were in 2021, where some people weren't even looking at houses. They're like, I'll just send my offer. Yeah. Right? So if rates are going to decrease, that prices are going to increase. And we're showing you right now the data that no one's building. Yeah. So like, it's good to own property. It's good to buy investment properties now. And if you can stomach that interest rate, as we say, even if you're going into a little bit of debt right now, that's going to go away because the houses aren't being built to match that. Right? So the reality is like, buy a single dwelling, try to find 3 different ways of renting it out, right?
Yeah.
Try.
Yeah, house hack.
Yeah, house hack to the fullest. You live there and make other people live there, you know? But the problem is everyone's waiting and sellers still think that they are, you know, in 2021, I had a townhouse person tell me this property went for 1.4. And I was like, yeah, but it's not 2021, right? But no sellers, some do, but a majority aren't understanding that. So we're still going to have houses sitting on the market and not selling unless someone's bought or in their desperate need to sell or they're unfortunately foreclosed.
Yeah, and that's the problem, because when people are in these positions where they have to sell, then it really brings down the prices. And when no one's buying it, that becomes a new norm. And that's why we're in the position we're in right now, because there's more people that need to sell than the amount of people that want to buy. Because we need the first-time home buyers to enter back into the market, and we need the investors to enter back into the market. Yes, we're doing like 5,700 sales a month, but that's really low. And the people that are mostly buying are selling too. And so there's more, and if you look at the active listings, they're just piling up because there's more sellers that need to sell that are coming onto the market than just first-time home buyers. Yeah,
and people that have been days on market for days, our strategy is usually like, you know, let's see if we can get a discount. They're like, no. Yeah, you know, we just dealt with that. Yeah. And we were like, condo prices are at their lowest. Like, take our offer. You're not going to get one for a very long time. And they're like, nope, sorry. This is what we want. Okay, then congrats. You're going to be on the market for months to come.
Yeah, and they're crazy because the market is still going to continue to go down. So our price today, if we were to submit another offer in 2 months from now, guess what? It's going to be lower because that's the new market price, right?
There's one more topic we wanted to touch on.
Yes. So it's really sad, actually. A 56-year-old woman by the name of Yuk Ying, also known as Anita Mui, she went missing, and she's a realtor from Markham, and she disappeared in what they say suspicious circumstances. She was last seen last Friday, so today's August 16th. So last Friday, August 9th morning at her home. And the police have reason to believe that the last place she visited was a farmland in Stouffville. And this like really hits home for both of us because as women realtors, like that's one of our biggest nightmares. Obviously we're moms, so our biggest nightmare would be something that happens to our kids, but like very close second is something happening to us with a stranger in a home, because that's the kind of positions we're put in, you know, on a regular basis.
And I would say like, I think both of us are very, very keen on our safety at all times. We check in with each other. Sometimes I have gut instincts and I call you and I know something's wrong, or you do the same. But it's really not like a governed thing where we meet strangers all the time. We go into houses with them, and I know we're very like alert, like, you know, stand back from them and like don't take this offensively if you've been a client of ours and you're like, oh, she did. It's just, you just never know. Sometimes people, you know, when I listed my own home property, were like, can I just come see it now? And usually, like, you know, it was the first time I was doing real estate and I'd have someone there, or like if I did an open house, like somebody would be outside. I don't do that very often anymore, but they are very dangerous. Like anything can happen.
Yeah, you just never know. And just like, it's just like the perfect opportunity for a predator to take advantage of somebody. So you have to always use your gut instincts. So sometimes, like literally it happened last week, Jess, like someone wanted to see our listing and I was like, okay, I'll go show it to them. And honestly, I should have vetted them. I didn't. And I got there, and as soon as I saw him, like my gut instinct was telling me this guy's off. And so I should have just been like, actually, you know what? I have to do something. I shouldn't even open the door for him, but I did. And he was just standing so close to me. I left the door open. I'm like, I got to get something from my car. And I just let him look at the house by himself. It was the worst tour of life. But I was like, you know what? Like, I just didn't feel comfortable. And it was a vacant home anyway. So if it was like my actual like seller's home where it's like their belongings, obviously I'd be more careful because I don't want anything to get stolen. But it was a vacant home, nothing like that. But it was really scary to be in positions like that. So I was talking to Marianne Gillespie. So we have a real estate coach, and she was saying that you should always have an eyeball to eyeball meeting before you ever show a property to somebody, even if it's just Zoom, just because your gut instinct will know whether or not they're actually a buyer, right? And some people will say no, they don't want to do it, but you have to just tell them and just be transparent. Like, I can't put myself in a situation like this. Like, the world can be a dangerous place. So if you're not okay with that, then find another real estate agent. And we just have to set that boundary.
And I think it's even moving past showings, which is strangers, sometimes it's other realtors too.
Yeah.
How many times do I send you text messages of like, what is this? Like, I'm trying to work on a deal and you're just like, let's meet, let's go to coffee, let's go here. Like, why do we need to go to coffee? I don't even drink coffee. You know, that's my like number one thing. But I remember once I did an open house and I baked cookies and I wanted to be nice or whatever. And one of the agents, because, you know, our numbers are everywhere, he later texted me that night and he's like, I liked your cookies. And I was like, what the? I was like, okay, I'm not going to swear on the podcast. And I was like, okay, are you coming in with an offer? Like, you just said it, right? But like, it just... I once, and I don't know if I even sent you this, I said when I was getting IV, I'm like, I'm the hospital. Please stop messaging, right? And then, oh my God, are you okay? Can I come see you? And I was like, I don't even know you. Like, what's wrong with you? But now our broker of record, Shan, I'm like, I'm going on vacation. Please, all communication should go to him. And I'll call him and I'm like, please take this on. But it is dangerous and it's unsafe and there should... I don't know what rules and safety you can take in besides tips we all tell each other as women anyways. Yeah,
because I was trying to think of what rules should be in place. Like, yes, it'd be an ideal situation to always have 2 realtors come and do showings for people you don't know. But like realistically, that's not always possible. Like our days are packed every day. I can't go to your showings with you. You can't come to my showings with me.
We have our own clients. We're like constantly busy and sometimes an eyeball meeting is great, but it's just not possible.
Yeah. Well, I think we just have to set that boundary. If you want to see this property, we can jump on a Zoom in 5 minutes, have a quick chat, and then we can go check out the property at 6 p.m. tonight or whatever the case may be. Mm-hmm. And if they're really pushing back on it, then say, well, sorry, this is just my process.
Yeah.
Find another realtor.
That's exactly what we got to do. Our safety is top priority.
Yeah, exactly. So on that note, we really hope that Anamui gets found. It's really sad. Our heart goes out to her family. And hopefully we get some good news in the next couple of days that she has been found. We will check back with you guys next week, the next episode, which will probably be released in a couple of weeks. If you have any questions for us or would like a personal consultation, our link to our calendars is below. We would love to jump on a 30-minute call to discuss your personal situation.